The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 12th day of June. My pleasure to be here Monday through Friday, and this is a very exciting period because last week, we were discussing that there was a really good chance that the three sectors, as I said to my subscribers in my opening call, the three sectors, the Qs, the QQQ series, that's the NDX 100, the SMHs, the semiconductor vectors, ETF, and the XLK, the S&P tech sector, were becoming extremely vulnerable. At the same time, there was a chance that some sectors had to complete their legs to the upside based on the Chapman wave methodology. So let's go through this step by step. We're looking at the S&P down 475. Now, I spent a lot of time over the weekend trying to recount this to say, okay, in the Chapman wave methodology, couldn't there be another count? That wasn't the leg C with a potential peak C today. And in the Chapman wave methodology, we always expect at least a D before there's a more serious decline. In the S&P, this is the E-mini, the June contract. And no matter how I count it, that is a C. It seems to me that there's enough residual strength to maybe make a peak C1, C2. It doesn't have to get to 24, 45, 75. But there could be a bit of a rally that takes it towards the 24.42, let's say, and then it could come down. So vulnerable in the Dow, vulnerable in the S&P, but this is what we're looking at. The numbers that we're looking at, there was a peak D in the 120-minute chart. Remember, we're talking about Ds as being very important. And it goes from 24, 45, 75, plunges intraday. There was just, I remember there was some discussion about just one or two of the really high flyers, NVIDIA, etc., and out of the blue, kaboom, plunges and accelerates to the downside as everyone trying to get out at the same time. So that makes the upside very limited, but this is what I want you to show. 120-minute chart plunged to the 200-period moving average of 2414.75, then rallied up towards the black line, the 9-period moving average, right there. This is the right corner that we're looking at out of the four charts. Let me show you what it is. Behind you, you've got the monthly. And we're trying to see whether or not the E-mini has enough strength, at least to rally from the 24.25 area it's in now to the 24.32, 24.35 area. We're going to be watching that closely. Certainly, another pullback that takes out the 24.17 low will test 24.14. It'll be very ugly. All right. So here we go. Dow. The Dow is trading down 42 points. Made a peak E in the 120-minute chart. Let's move that away now. It did go to a 5, but this 5 can extend in the Chapman wave methodology, Chapman wave 5, but it is a leg E and a possible peak E if there's no new high today above the 21,305 high of Friday. But it's the weekly chart that suggests that it is struggling to cross the MACD, cross positively the fast-moving average green line above the slow-moving average. Yet the stochastics at 90%, and 90% is very good. Monthly chart is in leg E. So parameters, any push, doesn't have to be a close, any slide below 21,160, very negative. 21,122 will be the very next support. I think it's going to try to push higher. I think at 21,235, I think it's going to be getting close to the 21,260s, 270s. And if it can hold that, we could even have one more test of the highs. All right, S&P, SPX, the actual cash index, made a peak C. There's no other way I can count. I mean, it's very upsetting. If it was a D, E, F, or G, I would have said, whoa, this is really negative. Stochastics at 84%, coming down, but still good, above 80%. MACD hasn't crossed negative yet. It's on the 9-period exponential moving average. Make it simple. The close below 24.18 says, nah, this is going much lower right now, not later. a push above 24.32 to 35, somewhere around there, is very good action. Now, I need to talk about this because it's very interesting. In the markets, when the S&P futures are down every morning and every afternoon they are down sharply, 12 to 15 points or more, and intraday there are very nice rallies, but they constantly fail and it makes lower lows and lower highs. That's a bear phase. So when I was watching the futures, when I watched the market on Friday, remember from my opening call, I discussed this on air. I said that we are actually long. We have quite a number of long positions. For some reason, I didn't grab the short SMHs, which is normally what I would do, but I was so intent on trying to play the upside, which we did very well, did very nicely, and we still actually have long positions that are doing okay. I'm looking at this and I'm saying, there's something wrong with this picture. When you get the invitation to plunge and you don't take it, when the S&Ps, when the Nasdaq's down 120, something like that, hey, that's quite bullish, just shorter term. And I think it was a news-related thing. It wasn't a functional. Now you're getting the functional thing where there's been decimation in some of the key charts in the NDX and all the components that we were talking about before. So let's just move on, and I want to show you something very interesting. The weekly chart of the S&P has crossed slightly positive in the MACD, and the stochastics at 91%. That is really good. So I'm just holding off a little bit on going short these indices that are down the S&P, because I think there's still enough internal strength just to confuse people a little bit more. Let's go to the QQQ. The QQQ series, let me just move that out of the way. Now that is a peak C, and I don't know how it's ever going to make that D. It failed. I don't even know how to count it. I've tried every which way. It doesn't work. It's a peak C at an all-time high in the daily. We know that eventually these things do go to Ds, but not if it takes out 135.87, the start of this new leg up. That's at 139.13, down 85 cents. Come back off the lows of the day. It's at the high of the day. We'll see what happens. I do think that there was a move to the downside on Friday where it was triggered by emotion. And now we're starting to see the technical veracity that there's just enough internal strength to have a bit of a rally. But I do think we've set the stage that there's probably a leg F and a peak F in the weekly chart of the QQQ series. And that's going to put a lid on the upside for the down the S&P. Maybe not some of the other indices that are trying to play catch up, like let's go to the IWM. IWM has had a fantastic move. It's in leg D at 141.73. It's up 13 cents. It's leg E in the weekly. We were 3 times long from the 5th. We took off half of that position on Friday at the all-time high, and we've kept the other half right now. And that's just, we're going to try to trade this as long as we can, because I think there's just enough residual strength in the Russell 2000 to go a little higher, not much higher, but a little higher. So we've got those out the way. I want you to look at the New York Stock Exchange and then NYA.X, and then, of course, leg F in the New York Stock Exchange. Maybe it's an account. And leg E/B in the weekly chart. God, this is pretty fascinating. I'll be back and we'll talk about what's fascinating. And we'll talk about gold pullback, talk about the dollar trying to find some support, talk about copper.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I'm just answering someone who bought my CD introducing the Chapman Wave methodology and asked if there's an audio version for YouTube. No, these are the things I discuss all the time. But if you have a specific question, just send it to me and I'll send you examples and I'll explain it as clearly as I can. Looking at the cues, Gajan the Dan, who knows my work very, very well, Chapman Wave methodology, suggested that there was an alternate count on the 16th as an A. I thought about that, but not when you pull back that deeply. If the pullback, that horrible, ugly day, remember that was down over 450 points down on the 17th, if it stopped just a little below 137.38, the low of the 11th, I would have said, okay, that's what's called it in my parlance. The Chapman Wave flat base alternative, that says I haven't looked at one of these for a while, flat base alternate count. So that would mean that whatever happens when it makes the D or E top, it's coming all the way back and is going to take out 135.87. That kind of makes sense. But I'm going to just stay right now. All you need is patience. Remember, we were looking at the IWM, and the IWM made that peak C on the 26th of April at 141.82. And what I'd say is that in the Chapman Wave methodology, it is so unusual going through not 10,000 charts, but really hundreds of thousands of charts over the 20, 30 years that I've been doing this, to go to an all-time high peak C and then fail. Eventually, you're going to make the D. So, yeah, you go to 141.82 on the 26th, pulls back to the low that was made right there on May the 18th at 134.23. Bam, now we've got our legs D. I don't know how it works. Everyone always says to me, how does it work? We've done this so many times, and in the end it works. I don't know. I actually think I know, but thinking and really giving you veracity with technical information, I probably one of these days will take the time to do it. And it has to do with the conclusion of a wave. It's almost like looking at the waves in the ocean. But in the meantime, let's just say that it does it. I don't know how. And I think that we will get that. So let's leave it as it is. GQ took a huge hit. It seems really unlikely that it's going to go all the way to 143.90, but it can make a V-shaped pattern, and it can get real close so that I can say, aha, now if it fails, we're close enough to say that's a peak C1 and a peak C2, which has a lower high, but has all the ingredients to say that it equates to what I would expect if it was that fourth highest peak, PD. Okay, so now let's move on. I want to look at gold. I've got a lot of questions going on, so let me just do this. Gold is down. I think that, you see, he has the peak C, but it's at a recovery high. So it didn't go above the weekly high of 1,300.70. The high here was 1298.80. So there it is. That's like a peak C1, C2. I think gold is going to be pulling back, and I think that the dollar is actually going to have a bit of a rally. The dollar right now is at 97.24. Not great shakes, but the technicals are improving in both the daily and the weekly. And it's suggesting quite strongly that if by Wednesday afternoon, Thursday, instead of plunging below 96, so 96.40, what was that, the low? 96.51 was the low on the 7th of June. Instead of plunging under that, and that's a trough C, we're going to push higher. And we're going to see the dollar close in the 98.20s area. There's that chance, and I don't want to make light of that. All right. So now let's go on, because we've got the dollar, we've got the gold, we've got silver. Silver is down, if I remember correctly. It was down 0.22 at 60.99. It did stop dead at the 200 period. Just above the 200 period orange line, that's the 200 period exponential moving average. And then the simple moving average, it went to and stopped dead right there. So silver made a high peak D on the 6th of June at 17.745, trading now at 60.99. No great shakes, but it really suggests from the technicals that this failure with weak technicals is going to see a pullback deeper. And that seems to correspond with what I'm looking at here. So let's look at the EUR USD. So there were questions, and I'm going to go to the questions in a minute. Euro-dollar currency pair, I think that's a peak F right now. It's making the oval pattern, but this is not an oval pattern that at this point is suggesting it's going to break out in the Chapman wave stalk leg. This is just because, let me do this, because what I really wanted to highlight, and I grabbed the oval, was this arch formation. Really, that was my thinking, that I believe there's an arch formation. I'm not sure that 1.128 is going to be hit. I think the 1.27s is the peak right there. But we have got a peak C, and it might be a little while, and then I think we do go to a D and challenge the high that was made back in the week of the 11th of November at 129.89. All right, in the euro-dollar currency pair. And if you go to the USD JPY, did you watch that woman's? I didn't watch the men's. I didn't have a chance to. Or maybe I forgot. I don't remember. I think I played instead of watching. If you watch the tennis in Paris, the women's final, I must say that goes back to the Sampras days. I mean, it was fantastic. It's tennis I love. Side to side, forward, backwards. You're all over the show. Good serving. It was really, and the points didn't end. They just kept going. It looked like it was the winner, and then it looked like that's the winner. And then, it was fabulous to watch. And that young winner, she was amazing. All right, let's back to the sport of the market. The USD JPY is making a leg A, and it looks like a peak A here, trying to rally, but it's really trying. I still think at 109.84, it's going to try to test the 108.50s. Euro-dollar currency pair. I mean, the dollar, Japanese yen currency pair. Let's go to oil. Crude oil over the weekend, I thought it looked quite nice. Yep, it's acting well. It's up 64 cents, 46.47. Remember, I said last week that I thought that this coming week is going to see tremendous changes in what was working is not going to work, what wasn't working is going to work. That's kind of the thinking that I have. And I wouldn't be surprised if crude oil actually has a pretty nice rally, but only if at 46.47, it really has to hit 46.10, 48.10. If it does that, instead of breaking into the 44s, I think you can see a nice bounce in crude oil. And that would suggest, hey, how can the dollar and crude oil bounce? Because you know what? These things have been changing characteristics lately. So that's a chance that we're looking at. Then the XLF, is this just a bounce? XLF is trading at 24.32, down up 3 cents. Is this leg C going to fail and you don't go to leg D over the next few days? Well, that's the test. And we'll have to see. But in the meantime, it is making a nice cup formation after the successful arch test in the weekly chart. The MACD hasn't crossed positive yet in the weekly chart, but the stochastic is looking good. And its leg E in the 120-minute chart might have a little bit of a hesitation here as we wait the Fed's decision on Wednesday. But if I go to this chart right here, this is the triple yield chart. This is the white is the 30-year yield, 20-year yield, 5-year yields in cyan. And I think there's a chance they could have a bit of a bounce. And everyone will say, oh my God, rates are going high, rates are going high. But it might be short-lived. It might only be like 2 to 3 weeks. And then it starts coming back down again. And I'll talk about this when I get back. That's iShares Global.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So let me just show you the 2-minute chart right here. The E-mini is down 375. It's still the June contract. It made a peak D, and then it made a peak D. How important are peak Ds? Look, there's a peak D. There's a peak D right there. The double top at 9:36 this morning. At 24.29.50, it slides down to the 24.19s, or was it 24.19 exactly? Then it runs up to a peak D again, very quick, comes back down, runs up to a D and then an E. But it's all within a channel. Now you've got these 3 fighting patterns. One is the cup. Well, if the cup extends too far to the right, it's no more a cup. You have to find power through different moving averages and other techniques. And now this is the big test. Are we going to see late buying? See, as I said before, this is not the characteristic of a bear phase. That trigger on Friday should have just dragged everything down. The Dow should have been 174 points down. The S&P should have been 20, and it should have accelerated even further into the close in the Nasdaq. That is. So when I'm looking at this, I'm saying there's internal strength. Fund managers are still buying, and you can see that by the bifurcation that you've got. Financial stocks doing quite nicely, etc. Now look at this, the QQQ is at the high of the day rather than the low of the day. I like this. So the question was that the peak E that I have here at Chapman Wave 3 at 139.64 on the 16th of May in the daily chart of the QQQ series still had pretty good technicals, but I'm going to just treat it as it is. I don't see any reason why I should make a change. I will make a change if by the end of the day there's a failure pattern. So there we are. So now what I'm looking at here is over the weekend I went through, you remember the previous weekend, the reason why I was becoming so cautious on areas like the Qs, the XLK and the SMHs, the semis, is because I had gone through the NDX, the Investors Business Daily Top 50. And I mean, just so many were making D or E tops, potential tops in the weekly charts and Fs. Then this weekend, I went through the IBD Big Cap 20. That's Lam Research, MGM, Applied Materials, Microchip, Edwards Life Sciences. Remember that beautiful short we once had on Edwards Life Sciences? PayPal, KLA, 10 Core Corporation, Yahoo, Facebook, NVIDIA, Marriott, Quintiles, Activision, Stryker, it goes on, Alphabet, that's Google. And so many of these are still looking the same way. But within that context, there are areas that are very, very close to actually breaking resistance, to actually break out to the upside. And that's really what I want you to focus on. So now let's go back to our story. Whoa, it's taking a long time. This is still just the warm-up, right? Let's see. Bulls are expecting May 17th repeat. But, what if strong outside weekly reversals in ES, SPX, and NQ hold? Basil, please comment if you could. So let me do that as part of what I'm doing because I've got a lot of questions. Let me show you something. Look, GE, for me, it's a bellwether. So all of a sudden, it's up 91 cents. It was up at it was closed on Friday at about 27.80 or something. Boom! Today it's 29.47. What's that all about? Well, it was hinting all week that somewhere we're going to get some kind of a sharp pullback. And then today it spikes up. Well, of course, you know what that is. I remember, I wish I could go back to my archives and what I'd been discussing. There was an interview with Immelt, with Jack Welch, and I remember making the comment that Immelt has not a patch on Jack Welch. Jack Welch was a talker, but he could also do. Immelt seemed to me like he was coming from behind. He's always coming from behind. He wasn't a great innovator. When he decided to innovate, it's because the team said to him we should be going into energy right at the wrong time. The team said we've got to go into the financials, wrong time. So, and GE is still a major company, and their move to Boston I'd consider to be a very big negative for the company in focus, not money-wise. It's like an eye blink, whatever it costs. It's just nothing. But the focus from Connecticut to Boston, it's a big deal. All the payoffs, all the politicians, you have to promise this and promise that. It's confusing, even for a company like GE. So now he announces his retirement. Boom. Okay, goodbye. Market loved it, spiked higher. But this is not real. This is the fake news for the market. It's just saying, hey, we're celebrating because he wasn't a great guy in the first place. I'd love to see. Let's see. GE is at 28. Let's look at the monthly chart. Let's go back to 2000. Squeeze. squeeze. There we are. So 2000, I can't remember exactly when they announced it in 2000. I remember it so well. I got a visual in my mind looking at TV, and he was talking, and he said, "I promise you, GE's going to be. I'm going to continue what you've been doing. GE's going to be one of the great companies." And let's see. Well, whatever it was in the year 2000, when it hit a high of 60.75 in August of 2000, I would say that going down from 60.75 with Immelt down to 5.73 GE, March of 2009. Yeah, fantastic move up in percentage terms, going to the most recent high in the 33 round number area. And now 28.85. I think GE will be back, but I don't think that it's because of Immelt. I think he's done a lot of really, I don't know much about it in terms of the business, because how do you really know in a big company like this? But just from what he said, I think the focus has been in the wrong areas. Oh, yeah, Jack Welch got GE into the financial instrument. Yeah, but he got out at the right time. That's the whole thing, right? And yeah, it was a people builder. Yeah, that's right. Okay, enough with that. Let's go. So I want to go through. So GE I mentioned because it's my Dow quartet. So GE has a spike today. If this happened on an earnings, or if this was the earnings news, I would say fabulous. Returning the corner. Now we can see the heavy duty cyclicals start to strengthen, and those tech sector areas that have been on fire are going to burn a little bit. But this is just a bounce. At this point, I just have to consider it a bounce. IBM. Here's the question. What about IBM? Nice move up today. It's been going from the 149.79 area on the 11th of May to peak A, B. We can call this a leg C on the 12th today at 157. So what did I say? 149 to 157.20. 9-point move is the 8-point move. Yeah, that is very nice. So the question is, you were very sour on it 2 weeks ago. Yeah, 2 weeks ago, and it's actually rallied from the 150, call it 151 area to 155. 4 points. 4 points is very nice for IBM. I don't think it's ready. If you are looking to buy it, my thinking is that give it a little more time. I suspect that in the big phase of the bull market later this year, I suspect that IBM will finally get most of its little ducks in order. And that's where we could see IBM start to really lead. We want new leadership as well, but I don't think it's just yet. Give me time. I'd say hold off on IBM. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Back, and the Dow's down 55, S&P's down 6, and we've got a whole bunch of questions, but we've also got a caller from Philly. We've got John in Philly. How are you, John?
Basil, I'm very well. Thanks for taking the call.
My pleasure.
Always great to hear you provide your insights, so thank you.
Pleasure.
Basil, I would like to ask you if you can give me your read on one of the finance company ETFs, KBE, Kangaroo Buddy SA. It's the banking stock index. And Basil, here's what I'm thinking about. The bank stock index peaked back on March 1st, just in the wake of the President's State of the Union address.
Right.
And it spent, ever since the March 24th low, was essentially going sideways, and then in the past 3 trading days, a big surge up, some sector rotation, the talk that the House of Representatives had passed some sort of Dodd-Frank, either a cancellation or some sort of new version.
Right.
Regardless of that, I can see a bull case in bank stocks and finance stocks, but I can see a bear case. And if it's the bear case, I can see the top having occurred just today on a higher open that tested a Fib 618 retrace mark, and now we reversed. I'm wondering if you or your Chapman Wave work suggests with any confidence that it is the bear case or if it's something else.
So let's do a couple of things. I just, while you were talking, I was listening to you, but at the same time was just quickly notating. I had a long time ago done the KBE, but I've got the KRE. But in the meantime, this is what you asked about, so I want to do this as thoroughly as I can. Is it going to give me the EFG? Yes. As
you're doing your notations, I can see on Tiger TV, so thank you, on KBE. Just for what it's worth, the ETFs, KBE, KRE, the XLF, and the BKX index itself, the patterns are all identical. So
they are, right.
For what it's worth.
So what I'm going to do now, this is the monthly. I'm going to show it, and then I'm going to put KRE, that's the regional bank index, and you'll see that, yep, it's the same thing, and I had the same alternate count. I had no choice but to do that, but this one worked out perfectly with the Chapman Wave Instant Restart. This is, if you don't mind, just for the moment, because I've done so much more work on the KRE than the KBE, the KRE has a monthly peak B It's held beautifully the 9-period moving average, and I'm just going to make it as simple as possible on a technical level to say that if in June the candle closes below 50, it's at 52.25, 4%, 5% down, should not be a big deal. But if it closes under the 9-period moving average, and that would be, let's just be as specific as possible, if it goes into the 51s and then closes the month of June in the 51s, that's going to suggest more time is needed before you can get your C and a D. But that, so far, this is fitting my scenario that says at a certain point, there's a chance that the Fed loses control of inflation and that we will see rates start to move higher, but it might be later rather than sooner. On the shorter term, I think we have a chance to go for a few weeks to the upside. Now, the patterns that we're looking at in the weekly chart of the KRE trading at 55.31 has this cup formation. Let me draw it in so people looking can know exactly. These are patterns I do all the time, so there's nothing here that's different. And what I like to do is always look and say, hey, wait a minute. And this I call the Sears and Roebuck, the Sears Holdings chart pattern years ago with Sears Holdings was actually up in the 45.50 area. There was a pattern that went up in the weekly chart, pulled back, looked as if it was going to break down, made what I call the H, lowercase h pattern. I thought it was going to pierce decisively the left side low bar, but instead it held, and then it turned around, and the next thing I knew, it was testing the highs. Since then, it's a pattern that I'm now very familiar with, which says if there is a successful test of this H pattern that can form a cup pattern, and there's a price that pushes above the arch high, in this case, the high of the 28th of April of 56.10, and then closes above it for 2 out of 3 bars, that's very positive. It means that you should be going even higher. So now the weekly chart has gone to a leg B right now. This is gray B because it's under the previous peak, and the daily is in leg B, and it has popped above the high that we're looking at 56.10, but so far it's only trading at 55.38. It's down 38 cents. So now we don't know what the Fed is going to do, but my eye says that if I'm looking at the let me use this one here. If I'm looking at the pattern that's prevailed in my 30, 10, and 5-year yield weekly chart, it's suggesting that if on Thursday the low hasn't been taken out of the yield of the 30-year of 29.12, and it's trading at 20, oops, it can't be 29.12, can it? 27.99, I'm sorry. 27.96 was the low on the 9th of June. That's last week. If that low isn't taken out by Thursday or Friday, but instead we're pushing higher, you've got to anticipate that the Fed could be raising rates, and this seems to fit in the scenario that I'm looking at. Fed rates based on their, not as a philosophy, but on their rendition of the template that they drew a long time ago. Jobs are improving, the hourly wages, all sorts of things like that, or the economics are improving that they are looking at statistically. It doesn't quite fit with what we're looking at here, which my reading says that we've got another rotational recession going on in some sectors, and it's just not being recognized by the Fed, and that this time it might be the wrong thing to do, so that they might raise rates. And that's why I'm saying that I've got to respect the fact, let me just go back to this right now, I've got to respect the fact that the Dow, under all readings, is in an area where it should have some kind of a consolidation. Doesn't have to say it has to tank, it just has to have a consolidation. The S&P, the same thing. But because you've got the QQQ so weak at this particular point after being so strong, having taken out almost 2 months worth of upside action, and the SMHs, which have been they've been leaders to a certain extent, making a potential peak F. I'm suspecting, if you don't mind, I'm trying to put the whole thing together as a package. I'm suspecting that there's a chance that rates could rally a while, that maybe just a few weeks, and that'll help the bank stocks to have at least a pretty decent bounce, and then and that'll coincide with a rotation through some sectors that do quite well in this 2-3 week period. But we're looking at sectors like the QQQ, the SMHs, and the XLK pulling back. So how does it relate to interest rates? We've got to also look at the IBB, which in many ways is interest rate sensitive as well. That's the biotechs. And they're not really moving here. I think they're stuck in a range. So my scenario is that rates, I think, are going to move higher for the shorter term. And then, because the news that the economy is not quite as strong as the Fed thought, they say, now we're holding off. And that's when we have the next move, and you start to see another rally later on in the semiconductors, but that might be later on. Have I answered your question or not?
Yes, you have. Thanks very much. We'll look and see if you get your, on the daily chart, your higher highs in the KRE. So thanks, Basil.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Of course, let me just go through these one at a time. So call buying on the KRE, expiration 9/15/56 strike. Okay, that kind of fits in with what I'm looking at. Oh, I'm just showing you the I don't know if I did this in real time earlier on. I know maybe it was during the break or maybe it was live. I can't remember. This is a 2-minute chart, made a peak E, and it pulled back below the 200-period exponential moving average. That's the green line there. And also it's gone to a leg C, actually a trough C. Now it has to start a rally and go back from 24.24 to the 24.2675 area, 24.2750. And it has to do it real soon. Otherwise, there'll be a weak close. And that's going to suggest that the S&P doesn't have to, the Dow has already done it. The S&P doesn't have to make that new leg up. It's going to be a very, very interesting close today. So let me get out of this, and I want you to just go through these one at a time. Yeah, so when I did a little more work on the XLF during the break, I still think that the XLF is showing enough strength to try to test the high that was made right here on the March the 16th at 24.97, and it's at 24.21 right now. I had a high today of 24.51. I think it's going to make a leg D and try to get there. That's this pattern that we're looking at, the cup formation. And I can just make it real simple. A close below 23.18 in the next 2 days would say, not going to do it, not going to do it. Okay? And I do think that all the financials need to have slightly, it doesn't have to be big, but slightly higher rates to move higher. Next question is, let me do this because you remember I did GE and IBM, and I said IBM I think has to do some retesting. So yeah, it's a good candle today, but I do think it has to do some retesting of the, 153s before it goes to the 160 area, 158 area. Triple M, my Dow Quartet, GE, Triple M is acting well. It's up 96 cents at 207.89. Really good, both daily, weekly, and monthly. Even the 120-minute chart. And UTX wasn't acting as well after hitting, just missing an all-time high, but it's having a high-level consolidation. So the Dow Quartet kind of shows you what I'm looking at as well. Kind of a mixed picture with two kind of strong and two kind of weak. And then the question is, where would you start shorting the QQQ series? You know, I might be wrong about this, Tim, but I do want to wait. I think at close to the 141 9-period exponential moving average, I would start to consider it. Now, that might be a different story altogether in the semis. That I have to leave for the rest of the day. We missed, what a pity, because we had some great entries, but we didn't do this time. So I missed it on the semis. Next question is Exxon. You know, I looked at this and I thought, hey, is Exxon now a dividend stock? Is it in play? Because I'm thinking crude oil has a bit of a bounce. I'm thinking I don't like the gap. It's terrible because it's now at 83.12, and just the other day it was 79s. Those 4 points is what you need for your dividend, etc. So let me just say I'm going to let this hold off a day or two, and then I'll be looking at it to say whether or not I think it's the dividend play. I think that the telephone companies are a little bit better. I liked them before. I kind of like them now more than the oil sector, the large oil integrateds. Let me put it that way. The next one, so Goldman Sachs probably pulling back after a gap up. Yeah, pulling back. See, Goldman's the one that said to me, don't get overly aggressive in the financials. Just go in step by step, small positions, and see what happens, because you need days. You need 3-4 days before you really get a sense. So that's that. And then OSX. Where did that go? It's dollar OSX. This is the oil service ETF. 140.08. Yeah, I'm going to hold off there. So I think I've covered almost all the questions I had. Short sell, or buy. Yes, I think the Qs will be a short. I'd rather try to get a better price. Maybe I'm going to miss it, but I'd rather try to get a better price. Hey, folks, stay tuned. We've got a great program coming up. Check out my opening calls, my daily newsletter, very comprehensive look. Gosh, I don't know how many charts I sent out over the weekend. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.